Let's get rolling. So I see some of you guys have been mentioning what you've been doing here. A lot of craziness out there in individual names. And I know, honestly, the way it's been, where it's concentrated in a bunch of, let me lower this one, in a bunch of, hot growth names. I know that a lot of you guys will fare better than I do in a market like this. First of all, I really have trouble chasing names that are up already, especially if I had played them not even once, a few times already. And a lot of these names, that being the case. But a lot of you guys, the way the style you guys play, especially on the option side of things, it's part of your forte, right? It's like what you do on a regular basis. And you can ride these names like a TTD, like a Roblox, like a Qualcomm. Anybody catch Qualcomm? Like I'm playing on the equity side of these things, and I'm being like really nimble at the same time, where you guys who play options, you give it a little bit of room and you could get a little lucky. You're still holding the QCOM? I think we spoke about this on, it might have been the weekend webinar. But see, like, you guys know me by now, right? Like, for me, after this, okay, even when you're in a melt up type situation or a chase, whatever label we want to put on this, these things have more legs. I still have trouble getting a decent piece and holding on to it long enough for it to be rewarding. What I usually do is I just get in the middle of the sweeper heat and try to take advantage of that on an intraday time frame. But the type of action, the amount of action that's come into some of these things, and they still, right? These things, how we've been talking about these names now for 2 straight weeks. Roblox, I mean, it's craziness. Shop, another one. So what's going to be interesting once this, because listen, what happens is, and we're not seeing much rotation, okay? Honestly, I thought coming into this week, that's why I held, if you remember, this is the Sunday webinar, but what I did, I came out of some TQQQ late last week, and I rolled the piece into TNA. So the reason I did that was to have some exposure if they rotate, into the small caps. I held the piece over the weekend, TNA, thinking that some rotation would come in. And obviously that hasn't been the case, and the total opposite, right? IWM has underperformed significantly early this week. No, I don't still have it. We clipped it. When was it? Yesterday. We clipped it yesterday. I would like to get back into it, but it was pretty clear, both flow-wise and price action-wise, that there was no rotation. There was no rotation. So obviously, I was trying to front run, right, that possible rotation. It didn't work out. We took a little bit of a loss, nothing major. It's not like IWM got creamed. I wish I would have still held on to the TQQ. So it's more of losing profits than anything else, But anyway, what the real melt-up would happen if we start to see this rally broaden out, right? Now, like a couple of guys I talked to think that we probably need more digestion, or maybe even a quick washout, which maybe could come at the end of this week, OPEX, to see kind of that, rotation. And Dan, you were arguing with me last week that the melt up has a long way to go. Now you're telling me we melted up already? I can't figure you out. Weren't you arguing with me last week when I sold my SPY? Did you? When I got out of my SPY calls, didn't you tell me, what are you doing? I can't figure you out. Yeah, he said don't sell. So now you're saying the melt-up's over with? Yeah, I think he's busting my chops. See what I mean? He's busting my chops. So listen, anyway, to get that broadening out, right, and to start seeing some of the other spots, the laggards, the stuff that hasn't participated, get involved. There is a possibility of that happening, especially now that you have some of these, they're getting crowded now, some of these hot tech names. It doesn't last forever, right? We all know that. So one or two things are going to happen. Either they continue to chase these names up, and when it's done and they're done buying them, okay, and you see some profit taking in them, if that money is not rotating elsewhere, you're going to get a market pull, right? That's usually what happens. Now, if you do get those funds starting to rotate into the more cyclical parts of the market, right? Small caps. I mean, there's plenty of shit. We can spend a whole webinar talking about all the stuff that hasn't really participated. Okay. Then you have that, like this added kicker into year end, where you can have that leadership from, let's say, the industrials and the small caps, where tech lags a bit, right? So that's, again, I thought we would possibly start to see that this week. It could happen after, OPEX here very easily, right? This could last up until OPEX, and then we see a different tone out there. But that's kind of what I'm looking at and looking for right now. What a lot of people are looking for, they're looking for into OPEX this week, possibly, window opens for a little shakeout, something to that effect. You had McElliott out today talking about it. I'm sure the Gamma crew is starting. Everybody who follows Gamma is going to start talking about that. When you have a move like this, basically, like we were saying, a melt up into a big OPEX like this, you have a chance for a little bit of wiggle room to the downside. But let's talk about some of the more important things out there, right? Because it's easy to throw melt up just based off price action, right? It's easy to say, oh, the market, we're going to melt up just because I think we're going to melt up because stocks keep going up. But there's reasoning behind the melt up. And the melt up is from players who are chasing, okay, forced buying coming in because the train has left the station without them, right? The market is doing what they didn't expect, and they have to chase performance, okay? So I mentioned to you guys we were going to get some critical, in what I feel, some critical information in regards to that, an update on that. And we did today. We got the Merrill Lynch client fund flow, right? And what was really interesting about that, you guys know, we talk about that every Tuesday. It comes out every Tuesday. Let's take a look here and you'll see what I'm talking about. Okay. So why were we talking melt up? Whoever's new to the webinar, right? Clients buy equities for the first time in 7 weeks. Okay. So think about what went on here, right? Major brokerage firm, right? And we spent a couple of webinars on this. As the market was firming up, okay, and coming out of a little bit of a drawdown, okay? As it rallied, instead of the usual scenario where everybody hops on and gets that FOMO because they feel like they're going to miss out on a rally, right? And you get everybody who gets long and then the market rolls over, right? What very rarely happened more so in this bull market than any other, you get non-believers, okay, that they don't believe the move, okay? Possibly, there's so much negativity. You have inflation, rates, this, that, the other thing that the price action is not convincing you that this rally is for real. you think you can see better prices. Okay. And when you have enough of the crowd on that same side of the trade, right, where they're not believing in the rally and are either on the sidelines or, God forbid, short, okay, you get basically the market just pulls away without them. Why? Because people, right, machines, whatever it is, realize that there's no exposure out there. There's a lack of participation out there. And they're betting that if they buy this and continue to buy it, they'll be able to sell it at higher prices to those non-believers who will eventually have to jump in the pool. Okay. And that's why you get this type of price action, right? And that's why, if you remember when we were here, which was a critical spot, right? I was being dead straight with you guys. There wasn't enough information for me to even have a gut feel whether we were going to break higher or lower, because I needed to see that to feel good about either possibility, right? If everyone is getting involved, then, we have good odds of seeing the market at least chop around, if not trade lower from there, right? If they don't get involved, then you have a higher probability of the market continuing to firm up and push higher. So that the answer to that information we got later on, and this is what ends up happening, right? So now this update here, as you can see, they bought for the first time in 7 weeks, okay, led by energy names, okay? But what's even more interesting about this is what part of the clientele did all the buying. And it was institutions. Okay. So you have institutions, hedge funds, and retail clients, right? Like us. Okay. Institutions are considered, quote unquote, the big money out there, right? Maybe some people put the smart money label on them. Okay. Hedge funds, that's that next layer, right? Which is the smart money. Right? And I know when we look at it in a contrarian way when they're all on one side of a trade, but it's not about the hedge funds. It's more about just a big pool of money being on one side of the trade. All right. We look at the market regardless, whether it's hedge funds or retail clients when it comes to that. Okay. But hedge funds are considered, quote unquote, the smart money out there. And then the retail client who usually gets the short end of the stick most of the time. Okay. So that's what makes up this whole pool that they're getting a read on, right? And you had this week where institutions, and it's more than likely a seasonal thing, they usually do a lot of selling in October and they become buyers in November, right? It's no coincidence that seasonally too, October is usually a shitty month and November is usually a really good month, right? Because the big money out there, that's how they operate. Okay. So institutions have been sellers. This is the first time now that they flipped to the buy side and started buying. Okay. And you can see right here, I wish I could blow this up. There's got to be a way, but actually, where's my highlighter? Let me start using my tools here. Is this a highlighter? Okay, yeah. All right. So you see here, buying was led by institutional clients following 6 weeks of selling. So institutions have been selling for the past 6 weeks. They flipped to buyers. Okay. But look here, right after that. Meanwhile, private clients, regular retail clients, were the biggest sellers and have sold stocks for 3 straight weeks. Hedge funds also sold after doing a little buying last week. Okay. Oh, control Zoom? Really? I don't know if that helps me. Where the hell Zoom? I'll figure it out for next time. I'll end up shutting down the whole webinar, Dan. You know me. Oh, control plus sign? What is this? No, forget it. I'm gonna make things explode. Zoom, exactly. I'll be typing in tickers. All right. So what's interesting about this, off the headline, you're like, oh shit, they started buying. All right, whatever. But if you wanted to see buying from anybody, it's more than likely the institutions, right? And see the rest of them sitting on the sidelines and still waiting for a better opportunity. Okay. And this is because it could get confusing a lot of times when you look at positioning off different time frames. We get updates on this every single week. All right. So we try to put pieces of the puzzle together each and every week. And when there are things that stand out, right? Something like we've been seeing here where a market can rally away from players who have no exposure, or the big rotation into growth names where everyone got spooked out of, right? So you see these major things, and that's what, that's the real actionable stuff out of this. It's not each and every update you're going to find some sort of amazing trade out of it. It's kind of like you need to stay patient and let things develop. And even when they develop, I'll be honest with you guys, even though this is kind of what we were expecting in the market here, I haven't been killing it. I know a lot of you guys have, because again, it's in names you guys like to play. But, for me and my style, even kind of anticipating the move in a sense, it's just, it didn't fit as well as if we were coming out of a correction like we had, or a pullback, and I can leg into things into weakness, kind of. You know what I mean? I don't know if that makes any sense, but that each and every one of us, we're just wired differently, and that's the way it goes. We're a lot more comfortable doing certain things than we are others. All right. So regardless, the takeaway from this was that institutions did the buying. Okay. On the ETF side, you see this here. Okay. Value over growth. That this has been something that, we've been talking about for a while. While everybody has been scared shitless out of buying these growth stocks, they've been scared out of these growth stocks completely. That's why you're seeing these crazy moves in some of these things. Like if you look, we talk about the ones that are going bananas, but even these names, look, you guys see Snow recently? Nobody, I can't explain to you, like everybody I came across and I mentioned Snow, they looked at me like I was buying some pink sheet bulletin board stock trading at 30 cents. That's how spooked out of it they were. What, you like Snow with rates going higher? You know what I mean? Like, and where do you think they got that information? Where do you think they heard that? Where do you think they got that information, right? That was the lingo going around. Exactly. That was the noise out there being fed to everybody over the summer, throughout the summer. And, that trade got crowded. Everyone got scared out of these growth stocks. And when you're scared, right, you guys know, when you're scared of a market or scared of a stock, you're not even paying attention to, the price action or anything real that's going on, right? While everyone was getting spooked out of this thing, right? They were sweeping every little dip. They were buying every low on the stock. If you're a technician, this is exactly what you want to see, right? The right side of a chart after forming a bottom. But when you're scared and you're worried and that noise is in your head, you ignore all this shit, all the constructive stuff that's been going on. You ignore it all. And now what's happening is you're getting a lot of players out there who have no exposure at all anymore that need to have some exposure in these things. And that's why you're getting these crazy moves right now towards the end of the year. All these, and you're talking about hyped up names. Snow was a overhyped IPO. Everybody wanted a piece. And then a couple months later, some sour price action and listening to, the media all day long, and you have no interest in it. We look at this thing every day to get even more sick, but it's just unbelievable moves. So I agree with Dan, who's making the point about a melt up, like without a doubt, a lot of these things have already hatched, right? We can still trade them tactically. We could still get in the middle of them. There's still a ton of momentum in them. They're still sweeping them up like crazy. Okay. But at some point, these things are closer right now to a breather than a larger upside move, right? That the odds of that we have to acknowledge. I mean, the probability of that's high, right? Can we all agree there? Like the likelihood is there's got to be some consolidation or some sort of breather before these things can do their thing again. Okay. And the question now becomes when they start doing it, okay, where's that money going to go? And that's what I think we really have to try to pay attention to and try to get a gauge on. Because again, that's, you know, that's where I'm not going to see the money it's easiest, right? Because think of it this, right? When we started to see the rotation out of cyclicals and high rate plays into these names, okay, this wasn't easy, okay? You can get shooken out of this very easily, okay? But that's where the opportunity is, where you can buy these pullbacks, okay? They're going to support these dips. Okay, so those are the early stages. These always usually come late in the move. All right, so I'm not going to say, you know, being early is where a lot of the easy money is over the intermediate term, but it'll get our eyeballs moving in the right direction. Okay, I keep using this as an example because again, if we didn't do that whenever it was late summer or whatever, midsummer, right? We wouldn't have any idea until now that these things were in play. You know what I mean? We wouldn't have any idea until now. So that's why we need to, as these things are still pushing higher, we need to start looking and paying attention to, okay, where are the spots in the market where they're leaving? Where's there no exposure now that we can possibly see some rotation into? And then we look for sweeper activity to confirm that, you know? But again, there could be many spots, you know, many spots. These tech names could, like Apple, I was looking at Apple today as I was catching that. Yeah, this thing could have a move in it still, a trade in it. You know, so I don't want you to get the wrong impression that the move in all these things is completely over. But what I'm saying is we want to be early in anticipating where the money might go when these things start to run dry. You know, because we may not feel it now, but there will be a time. There will be a time where tech gets crowded, severely crowded. It's going to happen fast. And we want to, biotech could, well, that's what's so appealing about the small caps and those biotech trades, right? Exactly. Labu, XBI, it's there. It's set up. We just need to look for clues of confirmation that the money's starting to go there. Otherwise, listen, it just may take a while and you need to be patient. You understand? But if you want to try to nail down the timing of it, that's where, you know, it really pays to pay attention to the sweeper activity, the price action, right? You start seeing these things, they soak up the selling, right? There are no more sellers. They're done. You start to see signs of that as these things bottom. Yeah, these things. So XBI this is Labu, right? And this is a 3-time leveraged ETF. XBI is here. Okay. And you can see, right? They look like shit. I mean, they haven't been doing anything. And another important thing, and this used to be a big problem of mine, without a doubt, a big problem of mine. You don't want to be too early, okay? Unless, you know, you have enough funds to take advantage of it all. But you don't want to be stuck in here when there's still some decent opportunity in things that have momentum, right? So I'll give you an example. think of all of you who, right before the webinar started telling me, you were playing Roblox, TTD, Snow, all these names that have been amazing. What about if you're stuck in an XBI or a Labu and you weren't involved in those? You'd want to pull your hair out of your head, right? You understand what I mean? So it's okay to pay attention and to, possibly start getting involved if you have the capabilities of doing both. But for trades, the momentum and where the sweeper activity, exactly, opportunity cost, exactly, right? So that's what I'm saying. We want to start to keep our eyes open to the next pretty significant rotation out there. Because again, it may not have started, it may not have developed yet, but we're going to start to see some real signs of it developing. All right. Anybody have any questions in regards to that? Yeah, Sharpies did nothing last week. I think they took off a little bit of hedges, but very interestingly, again, the specs, right? So the spec players still haven't jumped in the pool, as they say, on the long side of index futures. So, that usually arrives, right? Usually arrives before the music basically can stop. So commercial hedgers are still hedged, but the speculative money, they're not long yet. They're not long yet. How do we spot rotation? That's a great question, but kind of like what I was just getting at. If you are a member, right, the sweeper activity, and not just one bet, but more of commitment. So in other words, what you start to see in the flow, you'll see, I'll give you an example, okay? We saw you, right? We all had an interest in you. I remember we were talking about it webinar after webinar after webinar. I started to get interested over here. You guys remember, right? Dying to own it or play it because a lot of us already know the company. You knew it was a pretty hot IPO, and now you got a pretty nice discount here, okay? But we weren't seeing much of any flow in it at all. You know what I mean? Much of any action in it at all. And then, lo and behold, it finally bottoms. And then what we started to see change, we saw some really good-looking sweeper activity come into it initially, okay? So that's one round of action that gets your attention, right? You likely trade it, play it, whatever the case may be. But from that point, all of a sudden, we started to see you call sweepers show up pretty regularly. You know what I mean? It wasn't like they weren't around like they were here. We didn't see any U action, worthwhile. And we started to see you sweepers get involved. So they were starting to show commitment. And then when you look at the price action and you look where that sweeper activity shows up a lot of times, you see that they're supporting all these little dips in the stock. So it's acting different. You know what I mean? It's acting different. Even more so than you was the snow. Every time this thing dipped, they hit it with $500,000 sweeps. Every time. Right? Every time this thing had a downtick, I remember, when was that day? The stock got killed. People were looking to jump off a ledge. Here it is. Look at this. You can't, first of all, you can't even see it, right? If you just scroll back on the chart, now I'm going to show you where it was. I think this was the day. I kid you not. Okay. And it wasn't at the start of the rally, but this was the day that really told you this thing was different. Right here. This thing gapped down, was an absolute bloodbath off the open, looked like horseshit, right? Aggressive selling in the stock. And then into that sell-off. Boom, 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 boom. Sweeper activity came in. The stock reversed, made up basically all its losses, and then ripped, right? That was off earnings. It was something that was big that day. Maybe it was a downgrade. There was something. It was off news. I remember that for a fact. It was off news. They exactly. They bought it with three hands. And listen, you guys know in regards to the price action, it's one thing when the stock makes up all that selling pressure, in the day. And then it's another thing when it goes and it rips like that off of that. Was it Cleveland downgraded it? Was it that? Oh my God. You got to be kidding me. I remember it was news. I thought it was a downgrade. And Cleveland probably had negative comments on it. Yeah. So you guys remember it. There you go. Right? So it's things like that that you start to see that look different. That look different. And even like, let's say you don't play the first batch of action that's in the name, right? For a trade, you'll see that those trades start to work again. They work. You could actually make money off the call sweeper activity that's in these names. So that's what you start to see. You may not see it in all the names you would want to see it. Like somebody mentioned Path, right? We're all kind of waiting for that to happen because we want it to happen. But who are we, right? To me, the stock still looks good, but we don't know if we're going to see that type of commitment out of the sweepers. You know what I mean? But when you start to see it in enough of names in the group, then you can come up with that thesis, at least for the group, that it's just a different look. That on top of, which is the most important part, nobody in these stocks anymore. You know what I mean? Nobody in these stocks. The sellers, there's no more sellers. That's what happens. Right? And to this day, if you were to rewind this 6 months when Snow came public or right before it, you would have thought this trade of these names would have been the most crowded trade by now. Sean, you wouldn't think these names would be so crowded by now that we'd puke even to look at them, right? And they're still under-owned, if you can believe that. They're still under-owned. That's why like names like this, look at this. There are no sellers. You know what I mean? There are no sellers. Nobody owns it. So eventually what you have is you start to get buying come in little by little, and then they become sellers. But prior to that, even though this stock was really constructive, everybody got spooked out of it. DT, that's a beauty too. These are all beauties. You got a little dip there, but these are all monsters. The risk, I think, John, the risk in these things is that you get that rotation out of it and they need a breather. You know what I mean? That's the risk at this point. And I think that risk is across the board, even more so for the names that have gone nuts to the upside, because they can pull back pretty hard from that point. And even the names that have lagged, there's risk in them, even though it may not be as great, there's risk and just them being neglected again. We forget when these names get neglected, there's no Momo there. There's no juice there, and the juice will be elsewhere. So that's kind of what we got to pay attention to now. Would money managers take any real exposure going into the year? You know what it is, Alex? It's this. And this is what you got to understand, because I had trouble understanding it as well, because I said to myself, why would you chase for, you don't need to chase. When you are managing money, okay, when you have clients and you get to this point in the year and you don't have exposure in these names, and these names are the outperformers, these names are basically the darling of why the market has significantly performed the way it has, they need to show that they own them on their books. You understand? So one, they're trying to chase performance. They utilize leverage. They come into the option market. They leverage up. And that's why we see these crazy sweeps, right? That's why you see sweepers and roadblocks, bananas. Okay. Even shop, guys, shop doesn't catch a lot of flow. I look today because I can't even make out what rolls anymore in shop because it's so active. But even today, like you're talking about the $1 million sweeps just hidden in there. There's a ton of money active in these things. So, these funds are just looking to show that they own them, one, and two, maybe they can make up some of the performance via leverage. Yeah, shop. Yeah, I couldn't even play it. I'm embarrassed to say I didn't even play shop at all. And it had, I think, one of the best looking sweeps out of everything out there. You know what I mean? Because it's a $1,500 stock. If I'm playing the equity, yeah, obviously it was good looking, but it wasn't that good looking. What I would say, what do you think, Jay? For months you have been telling us to wait, all that frustrated, but now I tell you big difference. Wait, to all our frustration. What do you mean wait in regards to what? The market? No, what I'm saying is in regards to the groups out there, right? And I don't know what time in particular you're talking about. Wait. You know what I mean? What I'm talking about in regards to the rotation out there in the markets, there's stuff we need to try to take advantage of, like for example, these growth names, when you see a type of setup like we did in these growth names, I don't know what you mean by wait. You talk about wait for a correction in the market? Is that what you're talking about? Because I mean, you could wait for a correction in the market, but you'd be waiting months if you had to. Yeah, I don't know what you mean. Wait for a better environment for what? For swing trading? Is that what he means? Options? I don't know what he means. Yeah. First reading, I'm telling you what I'm doing, right? What I'm doing. Like for me, if I'm going to swing trade options 6 months out, I'm not going to do it into a melt up of highs, right? I want to take advantage of that more tactically. You understand? I want to trade off that. So for me, okay, I have to be patient, and I can't just buy a shop here 6 months out based off FOMO, So my style, I have to wait for better environment for a pullback or a correction. What you're probably referencing to is this, and I don't know. I haven't seen you. No, I'm not saying you're complaining. I just don't know what you're saying. I haven't seen you in 6 months, so I don't know what you're referencing. Here, you see this like here, right? Okay, that's probably what you're talking about. Wait. Like this is what I usually wait for before I start to do any aggressive buying, right? Like I'm not going to do my aggressive buying up here. I'm going to look to do it here and then, trade it tactically from that point. So that's what I mean about being patient. But yeah, tactical is the word, Rain, that you got to understand. And I guess I overuse it to a sense, right? I told you guys last Tuesday, if you showed me a chart of this, I'd be sitting in, you guys know, right? Those of you who know me know right here from Pink Panther, even tactically, I wouldn't be doing a thing. Even tactically. I wouldn't even be day trading. But when I know that, everybody is looking at this market the same way I would be looking at it, then it's foolish for me to not try to make money off of what's going on here. No? Does that make sense? You understand? So this is basically how I played it. pullback, and where was it? Here? I got long market exposure there, right? This candle to be exact. That was my entry of sentiment. Okay. That was a swing trade via options. Okay. We got to here. Oh, wait. Yeah, right around here. I dumped that position, my exposure at the spot. Okay. Now, right, time to reevaluate, hoping everybody's getting long and I get a pullback. You remember we had that conversation. Okay. It didn't pan out like that. Okay. Not everybody got long. Okay. Nobody got long, as a matter of fact. So now, what do I got to do? Right. I know nobody owns anything right now. And the likelihood is every dip is going to get soaked up and the market's going higher. Right. What do? I spit on it and don't try to take advantage of it at all. Or do I look to be a lot more just nimble and more tactical and trade my way through it with a bullish bias? Does that make sense? Yeah, so that's the way I approach things. Like, this is my sweet spot, right, of sentiment. But there's information along the way that you have to evaluate. You have to. It can't be. You can do it mechanical. You can be so mechanical where you say, I'm just buying this, but you'll be waiting. A lot of times you'll be waiting a long time for that. No? I mean, you have that discipline, more to you. If you're going to come in and turn on that machine every day, you're going to pull your hair out of you. But if you have that discipline, without a doubt, here's your sweet spot, without a doubt. No, but listen, every question is a good question. Rain, I didn't mean to think like I was getting on you. I just didn't understand what you meant by wait. Wait. Without a doubt, if you can wait for a correction, that's probably going to be your next best entry in the market, right? Without a doubt. Wait till Sharpies get long. That's going to be a great entry in the market. I mean, are you going to wait that long? You know what I mean? That's the tricky part of this game. Later, Trey. Have a good night. All in. I love cash. I agree. I would love to see all in signals, but you're not going to see all in signals, in a market like this. It's not going to happen. Yeah, hedge fund. So on that note, Frank, this is what it looks like right now. Okay, this is what it looks like right now. Here's what hedge funds look like right now. It's pretty much what the BOVA update explained. It's pretty much what we're seeing. So here we are. Okay. So, and this chart, I'm glad, Frank, you remember. This chart, doesn't it tell everything you need to know? Okay. Look, here's the pullback. Okay. Here's the bounce. What are hedge funds doing as the market's going higher? Okay. So this was that spot that I pointed out on the chart earlier, off the lows. That was that critical pivotal spot there. Okay. Where we needed to make a decision. Okay. At that point, I think it was out of my SPY calls at that point, to be honest, already, right at that point. I could be mistaken, but I think so. Anyway, are people chasing this rally, right? Is the crowd chasing, or are they not believing in it? Well, what do the hedge funds do? They don't believe in it, right? So that's what has you leaning bullish from that point there. Because again, it doesn't have to lead to a melt up possibly, but that every little dip along the way, they're likely going to need to add exposure, even if the market doesn't melt up. And that's, this is what we talk about every week. This is not, again, if you're a member, you don't need to be able to point this stuff out. You just need to pay attention because we talk about this every week. Every week. That's all I talk about. You probably are sick of hearing of it. You have to be sick of hearing it. But this is all we look at. All right. So you could see here now, Frank, see a little spike there, mini spike there. They did a little buying last week. Okay. But this week, they did a little selling the past week. It's a week behind. All right. So that's where they are here. So if you're talking about, is there more room for buying to come in? Without a doubt. They're not fully exposed. Not even close. You know what I mean? There's without a doubt more room if they need to chase. Okay. And what's another positive to this, okay, is that let's say this OPEX, we do get some selling, right? Let's say markets could sell off for whatever reasons, right? We do get a sell-off. And I think this is what I get more revved up for than the melt up. Because like I said, Frank, I'm not that melt ups, I'm not comfortable in. If we do get a sell-off, if they decide to sell even more into that selling, you understand? They're going to have nothing. And God forbid, they're going to be net short in a bull market. You understand? So they'll be at this point again. And then they'll have to chase. You understand? So that's kind of the way we look at it. So they did a little buying, but you still have some decent room here if they need to add chase or whatever the case. Yeah, Dan, I saw McElliott talk about it today. Let me see. Hold on. I posted it here off Zero Hedge. Here it is. Where was it? What is it? 5,000. 5,000. Listen, I would like to get a little dip. I'm not asking for much, maybe a little dip. Just kind of a little cleansing reset so we can knock out some of the heat in the option market. And then, I think that would lead to rotation too, to be honest, which would be good. Where is it, Dan? How come I don't see? Oh, here it is. Large call spread. Dan, what are the numbers off that call spread? Here it is. Nomura strategist notes that equities were whipsawed, ongoing market floors, ongoing unwind rollout of every large. I thought there was one that he mentioned here. Oh. Jules, cork it. I don't see it here. Jules always got to put a 2 cents in, Jules. This week's options again over the window volatility. Yeah, I don't see it on here. If I find it, I'll post it. She's always got to put a 2 cents in, Jules. Okay, and those of you who aren't familiar with the whole gamma expiration thing, basically, in simple English, there is in the option market, a buy the dip mechanism that has market makers, dealers to hedge. The way they hedge is they buy dips. Okay, and you get this kind of grind higher into options expiration. And then when that OPEX options expiration rolls around, that gamma rolls off the books. Okay, and it opens up the window for a little bit of selling because they're not buying every little dip aggressively. So that's the logic of it. There, yeah, that looks right, Johnny. 4,500, 4,700. All right. So what are they basically they're looking at it as 4,700 being resistance until expiration. How are they looking at that? So that's the way they're looking at it. Got it. Yeah, I heard about that that big spread. The underbelly names, Frank, have the last few days have been You know what? You had Bitcoin sell off today, and you had a lack of that risk appetite in spec names. Even though there was one big sweep. Did you guys see this sweep in this IPO that got destroyed? This thing. Wait. I think it's a milk company. Anybody know this name? Non-dairy milk. March 10th. I mean, somebody lit it up today. Lit it up. Oh yeah, Oprah. I know this thing. I know this one. Yeah. So I looked. There's November positions in open interest that it can likely be replacing some of that, and he did it all in one trade, possibly. But I think that's even a good sign that he's dishing out money to keep that trade alive, because this thing looks pretty awful. But I would definitely keep an eye on it. I mean, if this thing was on your radar as being sold off and washed out enough already, I think that March sweep is enough for you to pull the trigger. But if not, I would just keep an eye on it and see if they add to it. I saw, Frank, that you took a piece. I think it's worth it. I think it's worth it. Let me tell you, there's quite a few names. We might as well talk about them quickly. There are quite a few names that look like this, that have been just washed out completely, that have been catching some flow here and there. Okay. There's this name here. Let me think if I can remember the symbol. It caught big action yesterday. Risk reversal. It's a fintech. Something PN. Hold on. Let me think. I got to rack my brain here. I'm burnt already. Kind of like a PayPal it is. No, GPN. Thank you. Okay. So somebody came in and bombed this thing yesterday. Bombed it. You got a risk reversal there, and they swept some Decembers. So shorter term stuff. Looking for a trade, but the big money is, making a bet that this thing's bottomed. I think they were Septembers, right? Anybody catch that yesterday? I think they were Septembers. Yeah, see if you can see him. I know there was a good amount of time in it. No, it was a December sweep cash, the risk reversal. September, there it is. Thank you, Giordano. September 115, 150. There was a December sweep too, cash. So you are right. All right. So in simple English, players sold the 115 puts to finance the upside calls, the 150 calls. There it is. Thanks, Mike. Okay. So that's a legitimate trade right there. No. Bought the calls, sold the puts. Wait, what are you talking about? No, the risk reversal is 115, 150. So what they did is they sold the puts and bought the calls. He used the puts to finance the calls. The other thing is separate, the December sweep. You got it? So it's, heavy hitter trade. That's what you call it. Who we're seeing these 13 Fs come out of yesterday. Starboard, Elliott. That's the way they maneuver. So somebody is planting their flag here. We may see more action come in, and that would be a telltale sign that it's one of those wise guys playing. Yeah, it's what that. Now, the thing is, Matt, here's the stuff you got to weigh, right? This is what's been tricky about this market. Do you want to tie up money here? Maybe now that some of the other tech stuff have run a little bit, maybe, you took some profit somewhere or whatever the case. But the question over the last couple of weeks have been, do you want to buy something like this and sit in it while you have Roblox and TTD going apeshit, you know, that's the stuff you got to weigh. Or maybe you take a piece while you're trading some stuff tactically out there. You know, so if you're still out there, that's what I more than likely meant about being patient. Like, see, this is the stuff that you want to kind of accumulate with time. And you're not going to have that in the overall market when you're at new highs. Yeah, this chart is disgusting. Yeah, disgusting. So, you know, when you have a market correction and you have a good amount of stocks that look like this, and now you have sentiment on your side, so it, you know, it increases the odds the market, the selling is closer to done than not. You know, you could start legging into some of these names that look like this and make a good amount of money. You know, the problem is we're in a melt up, and you have stocks that look like this. So, you know, it's a strange situation. PayPal, I played the equity. That was a couple of days ago, right? I played the equity in PayPal. I like PayPal. Like, look at PayPal here. Okay, you're in a melt up. Would you ever think PayPal was here in a melt up? Yeah, it's craziness. But you got as we like to call it, super cyan blue. You got a bullish oversold signal down here off a niner. You haven't had that in PayPal. You look at this, right? The last time you had it was back in October of 2018. I owned it then. Wow. You want to laugh? I had my biggest position was then. My biggest position, I don't even know if it was a big position yet then, but I was building it at the time. So, you know, look, that's where it is right now. That's where it is right now. And you got some decent flow there in PayPal. I'm not going to say, you know what I mean? Oh man, they're buying the shit out of it. But it was good looking enough flow for me to buy the equity in it. Yeah, and it's bounced. It's bounced from where they bought it. If I'm not mistaken, I think they were buying Febs. They were hitting a couple lines. Another name, which goes with it. Okay. If this didn't get onto the ponytail pump halftime show, I swear to God, I would have equity still in it and I'd be holding it. I sold it because I just couldn't. It got hyped up and then the flow just exploded. Before the ponytail pump, there was enough action in this that I was thinking to myself, something's going on here. You know, that sort of aggressive type action. Yeah, you know, it's good and bad, Lewis. I like the pump because I get it. I can sell into it when I get lucky and they tout it. But then when I want to hold it, I don't like holding those things. You know? So it's good and bad, depending on how you're trading it. But yeah, there was some legit action in this prior to the ponytail pump, and then the ponytail pump came and all spec action went nuts. Yeah, there was rumors of PayPal just recently and Microsoft, wasn't there, Praveen? Yep. So, you know, keep these names on your list. You know, again, even if you're not in them or you don't like them yet, you know, these are the type of names that you want to watch here. Now, how does this fit into if tech sells off? I don't know. Like, these things are buried already, aren't they? No, I don't mind technically damaged stocks at all. I actually like technically damaged stocks for my option trades. I don't really like stocks in a downtrend for my tactical trades, if that makes any sense. No, I don't. That was up yesterday, right? AI. I don't have much, too much of anything right now, to be honest with you, Cash. I sold a lot of the equity plays I had. Here's another one that I like. this GitLab. Again, the risk is, I don't know if these Roblox, how these things are going to react if there's some selling in these things. The options are e-liquid ride. Oh man, I almost knocked down a coffee. They're bad. Really? Yeah, I don't even know. Honestly, I have no, because I played the equity. Yeah. And I wanted to maybe play the options on this if I do get back in it, but they're bad, huh? That's what sucks with some of these things. Yeah, I hate that too, Rye. Because then if you want to buy anything decent, you got to bid for them. I hate that shit. That's why I love the equity. All the names we follow, if they trade options, the equity is liquid as the sea. I tell you, options for me, unless it's a sweet spot trade where I'm playing it with equity, I like options when I put in and I'm willing to lose that premium. You know what I mean? That's the approach I like. That's the approach. Like, let's say I was really concerned about a market pull, but I like, yeah, so that's the way to play it, Matt. That's the way to play it. Because then think about it. It's like, it's like you're getting stopped out on a size trade. That's what it is. So that's the way to approach it. That's the way all you guys should approach it, especially some of you who are dealing with smaller accounts. I know you want to size up and stop yourself out, but it takes a lot of grief out of the equation. Yeah, it's like buying chop stock, Dan. It's like you're buying a stock with a $4 rip in it, right? When I first came into the Steam room when Lucci had the room, and I saw everybody playing Priceline at the time, right? So I pull up the Priceline options chain because I don't play Priceline options ever, and I'm looking. I thought I was getting delayed quotes. It was like a $5 rip between the bid and the ask, and I'm saying to myself, if they just took out the offer and to play Priceline, they're down $5. Yeah, it's right. Writing that stuff is the way to go, and that's what Lucci does, right? So, but like I'm saying, a lot of like the members were trying to trade it. Those things are tough. They're tough. So that's the problem with these names. We love them, but that's the problem. So you try to play equity, size appropriately, or either again, put in what you're willing to lose, go out with some time, and you're looking for that big risk reward. Not many, Cash, not many. But that's how you learn, right? That's how you learn. I played Prague, but I do not have Prague now, Moshe. Up again? Wow. They bombed this again today. Again. But I don't know what to do with these, Moshe. That's my biggest problem. Okay. Like I played this name. Honestly, it's got to be a month ago when I first played this name. Okay. Now it's up here catching all that action. The most I can do is get in there and try to get in the middle of it for a day trade. I can't do any more than that. I can't hold it from here. I can't do it. Yeah, that's the only thing I feel comfortable doing. Pump run, big short position too, right, Mike? Prague, I think. Google, Amazon. No, I don't think their runs are over. Amazon actually looks good. I just think, some of these names that have gone up in a straight line, you can see that this is starting to slow down a little bit, but they're going to go into some sort of consolidation, or there's going to be a pullback, half decent in it. It happens to the best of them, and these are the best names around. These are the best names around. Look, like Okay. Because let me tell you something. If this accelerates from here, that's where you really start getting concerned. You know, that's where things become a problem when you have that type of euphoric price action in a good amount of these things. Like look at AMD, okay? Right? We quickly forget. And for those of you who are looking for that big risk reward trade, it's all fine and dandy playing it now. And I'm sure we've all made money. It's hard to lose money with AMD right now, trading it tactically. Okay. You know what I was going to say, Presley, right? But, you know, the opportunity was when this thing did this, look, right? And nobody wanted to touch it. Okay. Nobody wanted to touch it. And if you remember, this was one of the first few growth type names that was catch and flow at that time. So, you know, for those of you who have more of an intermediate time frame that you're looking for, that's what I'm talking about, Dan, type of names that I'm interested in, you know, before they hatch. Now, granted, I'm not going to time it perfect and catch this move right after I buy it. You know, I'm going to buy it at some point in consolidation, and I'm going to have enough time to be patient. That's the trick. Always sold off. Exactly right. And it almost trained everybody, right? It was on everyone's do not trade list, as Presley said. Yeah, you need time. Some names, you need a lot of time. You know, you need a lot of time. Yeah, Snap is down here too, right? I mean, you got a decent amount of names that haven't participated in here. Mike, that's the $1 million question, Mike. That's the $1 million question that I find myself stuck on constantly. You know, the market, because here's the problem I have, okay? I'm not concerned about this GPN hanging around here doing nothing, okay? But let me tell you what happened to me. In 2018, okay, this was the last time that I learned a lesson and it stung me, okay? 2018, all my signals that I follow every day with you guys were telling me to sit on my hands, okay? Even more so than trade tactically, okay? But let's say trade tactically. And this is what the market was doing. All right? So for the most part, during this, I was doing what I'm doing now, okay? I wasn't buying calls 6 months out. I was getting in, right? Stop loss, looking for the pop, get out, right? Off all action that I like. Make a long story short, here, off this little measly dip, okay? They came in and they hit two names that were decent looking. They didn't look like the market. They were in consolidation and the flow was good looking, okay? Then, you know, market went to new highs. Those names, you know, went up a little bit. Nothing that I would take the profit off the table. And then this happened. And what do you think happened to those names? They got fucking destroyed. They got destroyed. They got destroyed. It didn't matter that they were already beat up, right? This correction beat the shit out of everything. So there it is, John. SGMS. Okay. And now look at SGMS. Okay. This thing is the best stock on the board. But anyway, where is 2018? Oh, God. It looks even worse. Okay. Here, sold off, right? Kind of looks like PayPal. Okay. Here are the same signals, right? Lighting up green. Okay. Here's your bounce, and then boom. You see that? Now, you guys know how I play a lot of times with those options. Okay. And I had a time on these options, and I got beat up. I got beat. We had a good year that year, and that bothered me because I gave a nice chunk of profits back from that year. This and the other one was IGT that I had positions in. So those of you who were around remember it. Okay. So that's the problem. That's the problem. That's the problem you face when you're in a market that has been going on for a while. That's the problem. Okay. This market's a little different where certain chunks of the market and sectors of the market, are in their own different world, kind of, right? Like you had growth that crashed and that already crashed. So it's a little different, but I'm being honest with you guys. I wish I had the answer to that. I don't know. Now, I give you a solution to it. You could pull the plug earlier than I did, and it's a loss. It may be a hickey, but it's not a big hickey, right? That would have been the smarter thing for me to do. Well, you didn't have a rigged market, Damien, until Powell rigged it at the end of the year, right? He rigged the game after the fact. I got caught before he rigged it. So, yeah, that's why I take the approach that I take, guys. You learn from experience in this game, and you react differently. And for a lot of this rally, as you guys know, I've been a lot more tactical and that's probably what Rain was referring to. I think, anyway. I don't know. I've been a lot more tactical than patient. And it would have paid to be patient. Yeah, exactly, Matt. And the only reason I did is because it was a half decent setup, right, in the indices. Otherwise, forget it. Right? And it was only a week. He's right. You're right. But that's why, guys. And listen, again, I don't try to scare anybody or anything. It's all fine and dandy, right? It's all fun and games. It's all fun making the money until that one time comes around where you get caught. Right? And then you're going to look back and say, you know what? It wasn't worth it. Yeah, I made money. I tried to milk every little penny out of the market. But now, I got hit hard and it wasn't worth it. So, but, there's enough, like I said, there's been more than enough juice to not completely stay on the sidelines here. That's something you wouldn't have, you never heard once out of my mouth, right? There's been enough to trade out there to risk some money. You don't want to go, balls to the wall with that type of risk out there. I appreciate that, Lafitte. I appreciate that. So, but that's like when and those of you who've been around know, when I'm bullish, and I'm looking to be aggressive bullish, I'm legging into positions and I'm not concerned about little, dips or being underwater or, cause based off those the signals, I have conviction that, this is a time where my upside, my risk reward upside to downside is well worth it. Well worth it. Here, if you get anything could happen too. Anything. We could be, China can talk shit tomorrow and all of a sudden this thing rolls over. That's it. That's what exogenous events are. You don't see them coming. They're not stuff that CNBC is talking about. So that's the risk. I appreciate that, Praveen. And again, it's you making the money, Praveen. I'm just sharing what I see. And, it's up to you to try to figure out a game plan with it, Yeah, what's interesting, Frank? They're talking about that all of a sudden Powell's not the favorite anymore. Yeah, I have a little E2. Again, nothing that is going to get me rich, Tippa. But I like this E2 as a tuck away play. Do you have it? Yeah, I have. Honestly, I wish I had more of it, but for the reasons I just mentioned. Oh, here are the odds Dan just put out. So this is, he's going down now, huh? Brainerd. Who's this? Bostic. I like Bostic. Brainerd are coming up here. Oh, so wait, he's still the favorite, pal? Dan, I guess he's still the favorite. Yellen would be super bullish. Slight favorite. I like Bostic as the long shot pick. He's got no shot though. I like Bostic. Nah. And Brainerd's more dovish than Powell is. So, I don't know what the reaction might be good for the markets if it's Brainerd anyway, right? What do you guys think? Tom Lee. That's what I agree with that. You think it's Powell? Cash carry would be, then I would take my signals, flush them down the toilet bowl, and buy the shit out of everything if cash carry got the pick. Cash carry is the Mac Daddy. Yeah, people knock him. He saved the whole world in 2008. And what's his name took all the credit for it, Bernanke. But, I know he's super dovish. Geithner. Here's another one. Those were good times. Hank Paulson. Remember Hank Paulson? Sweat coming down his forehead. The guy would come out and talk. He looked like he saw that Satan looked him in the eyes. That crew was something else. Hammer and Hank. Oh, the feet, you're killing me. Good times. But I like this E2. I like this E2. And what I really like about it, two things. One, the positioning in it, it's been longer term, quote unquote, good looking buying. It's not that speculative activity. And two, I keep asking you guys and I forget the answer. Isn't Elliott the ones? Isn't it Elliott? Isn't it them? Right? I mean, Elliott, almost everything they touch turns to gold with a little time. Almost everything. Or sweeper activity. Almost everything. So, and it's a cheap stock. It's a cheap stock. So I like it. Paul Singer, Paul Singer. CT, they've had this. This could be one of their losers. It's very rare, though. It's very rare. Very rare. They usually turn shit to gold. These things are just tricky. I don't know. I thought these things would rock in this type of, when they were chasing quality. That like remember they were just going after these quality names. This thing caught some flow, and even MasterCard too. Yeah, they could be worse. Like I think they were catching flow out of this consolidation here, right? And look where it is right now. So it's just they're tough trades right now. They're tough. They're tough. Yeah, fresh. I was looking to see there was some flow there, but no sweeper activity. But I was checking. MTTR. That's a beauty. That's a beauty. Again, something me and all of us should still be holding on to pieces of, right? But don't get me started. MTTR. But you see you love this stock, right? I don't blame you, Lewis. I don't blame you. I mean, you see the flow in it, Lewis, right? Like that's the definition of committed sweeper buying. You know, they're always around. They're always around the stock. They were there today again. Yesterday got tattooed, right? We talked about this. How many times have we talked about this name, MTTR, or flow? So, you know, it's pretty obvious. It's pretty obvious. Again, we all get trades out of it. You know, we get a decent pop out of it. I can't find a way to stay in it. And then when I stay in it, I don't stay in enough of it for it to make a dent anyway. So I'm not even as excited. I complain no matter what. You understand? I complain no matter what. Is that what the juice is right now? Meta? Is that what giving it a kick in the rear end here? Here's a sleeper meta stock. Caught a little sweep at the end of the day again here. Vuzi. Now, again, don't get the wrong impression. This is not MTTR type flow, nowhere near it. You know, scattered sweeper activity. 75% off the equity in a week. There's been some sick moves, crazy moves. You know, and think of this, right? Even, you know how we are. Let's say we even had exposure to the indices here. We'd be complaining that we're not in the names, right? Because the names are going bonkers. Which one, Matt? Coping. Yeah, you know, I think, is this a Reddit name? Is that where I know? Yeah, it's got to be here. That's where I know it. This thing catches flow sometimes. Coping. Is it a real name? I remember this move. This was crazy. Yeah, well, it looks like it's got some juice here. I think he's talking Meta, right? Metaverse ties. Oh, it's a semiconductor. Apparently, they have the next generation VR AR tech. Interesting. Here's another beauty. I don't know. Well, some of you might not remember this name. I saw Steven earlier. He'll remember it. Look at this. Look at this. I actually had a piece I was holding long term, and I dumped it, which was a long time. But I mean, it just keeps going. This is stupidity right now. Matt, to make it to get me even more sick with this name, okay, I wouldn't even be hitting the symbol up. One of my good friends who I worked with, right? He's a broker. He's got his whole book in this, clients. Yeah, huge position, huge. Okay, so he's got to give me an update every other day, which I'm playing around. I feel good for him, but I'm jealous, you know? I told you, he nicknamed this baby NVIDIA. Yeah. You guys remember, see? You guys remember? Unbelievable. Yeah, it takes some conviction, right? To hold it and be patient. Yep. I sold it. Where did I sell it? One of these little measly pullbacks that look like nothing right now. I ended up just selling it. Oh, yeah? No, Frank, this is a name from back now. I'm talking about probably 2018-ish, 2019. So you remember in the 30s, Matt. Yeah, and it was even before that. So that's why, Frank, probably you're not too familiar with it. Zitch, where's Zitch? Anybody see Zitch? Zitch, yeah, usually Zitch sleeps during the day. That's why but sometimes he pops up. I got to track him down. Yeah, Zitch, I don't know. Maybe he still owns it. I'm hoping. Nice, Q. Really nice. SE, yeah, but I mean, a dip. What's a dip in this thing now? Like you're hoping for something like this, maybe. This is like I don't even dip. Like this is beyond dip mode. I know this revolve. Oh my god. Oh my god. Uh, how do you stay in these things though, Matt? How? How? How do you stay in these things? But it's if you can find a way to leave a piece after we play them, when they look that good. Because again, we're not just cherry picking here. The reason why we're looking at these names is because when they got hit up with flow, you know what I mean? Nobody knew of them. They were under the radar and they caught good looking action. See, like Trung, those names, there's nothing wrong with those names. Like Shop just caught a beautiful sweep a week ago, but they already had done this. You understand? And not to say you can't make money in these things anymore, but the edge in like the sweeper activity is when they come in and they hit up an RVLV like they would hit up an Apple or a Facebook, when it catches real player action, that's an edge, you know? Yeah, exactly. Like the way they hit up, like for example, okay, this Otley, okay. Now this thing, let's say they come in over the next couple of weeks and they start gobbling this thing up. That's we never knew of the name. This name is a disaster right now. So you're getting in, right when some of these funds that know a lot more than you and I on these names are accumulating. And when they accumulate, they don't buy and then just leave it alone. These guys, they add on the way up. They need to own size, right? So when you got like an MTTR and they like the name, they want to position in it, they got to continuously add to it. So they're buying in ranges. All right, let's build a position between 14 and 20. That's our trade. And we're getting out while they're still buying it. Yeah, no, you have, you see how tricky, like this is the perfect example when they're over owned, right? When everybody knows about it. It's like pulling teeth to get a trend out of it. Which one, Frank? Which one? Milk, they're telling me. Soy milk, oat milk, or some shit. Beyond milk. So, like I said, today's trade is enough to put this thing on your radar at the least, at the least. Yeah, there again, this is more of speculative type action. So for a trade, definitely MGR. There was action yesterday, definitely. More spec action though. ME sold off. Let's see. Oh yeah, off earnings, right? Off earnings. Oh man. So look, let's see if they buy this, right? Here's your opportunity post earnings. It got downgraded. Oh yeah, Citigroup. I posted that. I remember. Yeah. Yeah, maybe I'll take a shot on this thing. They come and sweep it again post earnings, even though it's a SPAC. But SPACs, they're a different animal right now, right? I don't play earnings. And besides that, you have this already. You know, honestly, what kind of move do you have to see NVIDIA price wise for you to cash a ticket? What's the implied move? It's got to be huge. Like, can you make money off NVIDIA earnings? Like, it's got to be, I mean, a blowout. No, like you got to have a huge move. So you don't, it's not even getting earnings right anymore in NVIDIA. You're coming in after the move like this, and you're going to need a party here. Yeah. So that's why it's not worth it. It's not worth it. And yeah, it's not to say you can't do it. But, anything aside from a blowout, they'll probably sell the news. And maybe that would be an opportunity. You know what I mean? 260, you want to? Yeah, I mean, that's possible. Was that 260 a week ago? Yep. When's NVIDIA? Feels like NVIDIA's earnings never come. Tomorrow. I keep thinking it's every week and they never come. This AMD, I can't get over this AMD. Like, when AMD's made a move, when I'm looking at the flow come in and I see somebody buy the 170s and I'm like, 170, was this guy drunk? But I'm looking up, the stock's over 150 already. I'm like, holy shit. 170s, I'm thinking it's some lotto way out of the money play, like $100. A lot of times I forget the move it's made. Yeah, that's the way to do it, Frank. You hold, you put on some protection, and if you get a nice dip, you can add. Didn't Amazon sell off on the earnings, right? Where was it? Here. No. Yeah, I thought it was worse than that. Here it was. Oh, HLT, Alex, was a roll. That was a roll today. No, that's right. A roll. So basically, you know what a roll is, right? Somebody had a size position, they closed those, and they moved into the others. Amazon, very possible. I mean, very possible. The airlines, I can't do it. But if you need to play the airlines, you're probably better off going to the second tier group. A lot of times they'll act better, but that's one group I cannot bless. Yeah, I guess Q, because of COVID, that's why the ones who aren't domestic have been heavy. Yeah, Boeing actually has broken the trend of trading with the airlines. But Boeing's a tough trade too, don't fool you. JetBlue, exactly. Like if I had to, that'll be kind of a name I'd be looking at. Save JetBlue. But they're tough. How about even the cruise lines? I'd probably buy over the airlines, and they're tough. These names are doing nothing, right? These names are doing nothing. Yeah, these cruise lines. Now you got COVID heating up in Europe and all. Look, Booking gave back that whole last rip here. Look at it. Honestly, like whoever mentioned the airlines, I'd buy this. I'd buy this Booking off a pullback. Expedia, exactly. I'd buy these guys. Trip, yeah, Trip is. That was my last swing trade, calls wise. Look at this. Okay. We bought Trip here. Here. Now, if I would have traded the calls like I also had stock. that I sold into this rip tactically. If I sold there, I'd be in good shape if I stayed tactical. But no, I decided to swing it. But look, you see this? You know, this is not normal. This is not normal. Oh, do not touch list. And we got to get it ready. We got to get it teed up. Yeah. And, not to make excuses too, though, it had this, you know what I mean? So it's not like the sellers were done. We were just hoping like this was a secondary entry, you know what I mean, off that flow that came in. But this whole reopening trade got crowded and they all shit the bed. Just Trip is still in the toilet bowl. Some of them have improved a bit. Yeah, exactly. That's why it doesn't bother me. They're going to be losers, right? You don't need me to tell you that. And I don't mind losing my money when you have flow like that, Yeah, Rain, they went back to they were changing the whole business. Everyone got excited and then they called it quits. So, but this, guys, especially in a market that we're in right now, this can happen. It's not out of the ordinary. You see this with a lot of different names in different groups right now. It's not everything doesn't move up and down together. Micron's been hot recently here. I don't want to chase this, but we'll see how it looks once it digests. But all these names got hot. WDC, this one, the best of them. STX, look at that move. But the semis are too hot for me right now. They're too hot for me for swing trades. Yeah, Intel, it's not that I hate it. There's flow there, but like, I don't know what I'm rooting for in Intel. Am I rooting for the semis to do well? You know what I mean? Like, what do I need for Intel to cash a ticket in Intel? Like a buyout? It's a tough trade. Compact computer while you're at it, right? Yeah, they got a lot of work to do over there. It's dead money. This is another one, right? IBM. Yeah, these things are tough. Melly, that's a beast. There's hardly any flow in Melly ever. Melly, there was one guy or fund or whatever it is, huge position and rolls once a year. I think we saw him already roll this year, but keeps rolling the position, has been in it forever. But yeah, I don't like those names either. I love growth names, especially newer growth names. The problem with them is the liquidity on the option side, but that's my niche. That's where I do well for the most part. Unless it's a correction, then I'll buy anything. Honestly, I'll buy anything. We're going to have a correction one day. Is it? This is his largest position now. And we just started seeing a little flow in it. This is the North Korea Google, right? Wow. South Korea Amazon. That was close. And if I'm not mistaken, I think Bova had an interesting note on it. I gotta dig it up. So we'll keep an eye on this. He likes to sweep too, We're sweeping this plan. This plan has done nothing too ever since that run. Right? There's a lot of stocks that haven't done shit. IYR massive put volume. I gotta check that out. I gotta check that out. I didn't see any sweeps. Could have been a block though. Could have been a block. Some of these charts scare me, I'm not gonna lie. But we're going, when are we gonna get that correction? When, it's gonna happen. I gotta believe the beginning of next year, there's gotta be a correction. If not a crash. Right? When everybody's in the pool, you're right. Never. Yeah, well, if they rig the game, you're right, never, but there's gonna be something. There's gotta be something. There's gotta be something. I think it's gonna be flash crashy. That's what I think. You understand? I think it's something that is just gonna go boom, 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 and then it's gonna be over. 87 style, 1987. Yeah, exactly, Lewis, exactly. There's always something, exactly. But that's what I mean. You don't want to get caught, right? Heavy-handed. It's okay to get caught. We don't want to get caught. And more importantly, we want to have the bullets to fire when Sharpies go all in. Can you imagine? Like, think about how miserable that is. You get caught at the top heavy-handed, and then the market comes in 20%. Sharpies go all in, and you have no liquidity. You got smashed. All you could do is root on your holdings to come back or mortgage the house. But that, my friends, is why, that's exactly why I stay tactical here, See, because when the correction already has happened and you get everybody capitulated and you get Sharpies all in, I'm not scared of that anymore. You understand? I'm not scared of that anymore. I'm not worried about that anymore. Here, as more and more people that get in the pool, as you guys are saying, that's the main risk. And you're not worried about getting stopped out for losses on trades. That happens. Good market, bad market, sideways. There's no way to control that. They're going to be regular losers, but you do not want to get caught. Ooh, let's see, IVR. This was it a big trade? This one here? Could have been, let me see. Wait, IYR, right? Yeah, hold on. Let's see. Looks like rolls, spreads that are possibly rolls. Let's see. That's the real estate ETF, right? Let's see. I'm curious now. Because that's the problem. You look at volume, it's very misleading. Could mean anything. Let's see. What? Oh, here it is. Oh shit. That looks like that's a put seller. That's the opposite. That's bullish, if anything. Yeah, it looks more bullish than anything else. But it looks like he rolled. Yeah, he rolled. See this? He was short the December 92 puts. He bought to close those for 16 cents. And then he sold the March 95 puts. These guys, they're printing money off plays like this until there's that flash crash that we're talking about. You know how much money? You don't even understand how many funds do this. Like, look what they did here. Okay. Here, he probably collected a couple million, right? And then now he just took in 2.4 million. Unless there's what we're talking about, some sort of flash crash or deep correction, that's his 2.4 million. Now, if shit hits the fan, That's where these guys get buried alive and knocked out of the game. But right now they're printing money. Lasted more than a year. Yeah, well, bear markets. Corrections have been more common, up until the Fed rigged the game here. Correction used to get, every 3-4 months used to get a correction. The good days. Now, forget it. This is what you get right here. That's what you get. And you got to be ready to pounce, But that's it, my friends. That's the risk. The risk is the music stops for a little bit or something that's unforeseen, and you get some selling and you get caught heavy-handed here. If you're not, you're being smart, you're still participating, but you're approaching it in a more tactical way, you'll lose some money, but you'll be ready, because when that's over and, our signals are lighting up that we need to start hitting the buy button, we're ready and we have the loot to do it. I know that almost looks like a fool's errand here waiting around for that, staying tactical for that, but you got to weigh the risk of getting caught heavy-handed. Yeah, I'll hold overnight, depending, but yeah, I hold overnight. The main thing with tactical trades that I do, that I don't do when I'm swinging off better setups is I stop myself out a lot quicker and I sell rips. You understand? So I take the knife out. Yeah, exactly. And that's another good point. If I get the move intraday, a lot of times I just take it, or I take a nice chunk of it. I don't try to get greedy with size at all. I'm trying to take what the market can give me. That sort of thing. And then off of this, like you get something like this, right? I loosen up a little bit, but you remember when this was here, I'm not going to be as aggressive. I'm not going to go 6 to 8 positions deep here off this little pullback, but I'll swing some stuff. But here, even with melt up in place and everything, I can't leg into here. I can't do it. You went deep here, Frank? But see that, listen, I'm not knocking that. I'm not knocking that. If you're okay with that risk and you could get aggressive here, this was as good as an entry, Frank, since the election. Think about that. You know what I mean? Think about that. So, yeah, like I said, I got aggressive in a tactical way and I put on some swing exposure, but yeah, I didn't approach it like the COVID lows, I tell you, the COVID lows, I think I was like 10 positions deep at one time. I didn't know what the hell we had off of those COVID lows. I didn't know. I had even stocks I hit. I have no intentions that I wanted to own ever in my life. I owned Boeing, Home Depot, McDonald's, Trip. I owned Trip back then. I made a nice hit off of Trip. How about that? Crazy names I owned back then. Unfortunately, like a jackass, because of the options, liquidity-wise, I didn't play any of those growth names. I won't say any, but I didn't, nowhere near as heavy. I traded the equity there because of the reasons you guys were talking about earlier, the spreads and stuff. Oh, like a net and things like that. Yeah, the amount of money that's been, the amount of money that's been out there, Frank, it's like for this market, and I'll leave it at this and then we'll wrap it up. I could talk this shit all night with you guys. But it would have to be, I'm going to use that term again, it would have to be an exogenous event to get things really moving to the downside here. It would have to be something that not only gets the money on the sidelines, they have no interest in getting in, right? Something that scares them off, but something that almost would keep the Fed out of the equation as well. You understand? It's got to be something, and it's hard to even think of and come up with. Yeah, exactly. Right? Like, who would have thought, Cash? Right? There you go. War, exactly. You know, even though war sometimes is bullish, but you guys know what I'm saying. Like, who would have thought, if I would have told you that it would have been some coronavirus, you would have been like, what are you, come on now. You're going to wait for a coronavirus to take down the market? But that's what happens. Or it could be a mechanical issue. You know what I mean? What I mean by that is all these computers, I'm not the only one they drive nuts. Somebody screws up somewhere. Fat fingers, some shit. Later, Ram, you know what I mean? Something like that. Yeah, exactly, Frank. Those, you can't plan for, you know, in other words, you can't position for those, right? You can't. But when you have a market that's where it is now, you got to be more careful. That's all. Flash crash. Yes, I remember. That was 2010. That was during the Greece crisis. Remember, we were worried about Greece? Think about that for a second. We were concerned about Greece. That could be one, right? You know, but a lot of times, guys, it's something we can't even think of. You know, a lot of times it's that we can't even think of. But anyway, we'll talk about it when the time comes, right? Guys, as always, thanks for stopping by. Always a pleasure. Santa rally, get your Santa hats on. It should be an interesting week into OPEX anyway, so we'll keep an eye on that. All right? Be good, everybody. Have a good night. Good luck the rest of the week.